I am making hundreds of thousands of dollars as a Twitch streamer, but in the eyes of a bank, I have no credit history.
Literally, people have credit limits of $500 and they're still using their debit cards because they can't do anything.
You walk into a bank as a creator, hey, you're CEO of a media business, but banks don't see you that way.
People that get denied for a $500 balance card when they have millions of dollars.
Hey, what's up, everybody? Welcome back to another episode of the Branders Podcast. I'm your host, Arab, along with my co-host, Edwin. And today we have on the founder of a credit card. Well, they don't call it that, but we have Eric Wei on today, the founder of Karat, which is a credit card for influencers. Now, this might sound like an ad, but it's actually not, because, well, I met Eric a few weeks ago and I was like, holy fuck, this idea is dope. Let's have you on so we can talk about it, because a lot of social media influencers aren't financially literate. Eric, welcome to the fucking podcast.
Thank you.
Welcome.
Edwin, Arab, extremely excited to be here. And yeah, the whole fundamental premise of what we're doing is we're trying to build better financial and business products for creators to help provide education and ensure that when you walk in to try and get help with a mortgage or incorporate your company, the person on the other side actually understands what you do for a living.
Yeah,
Because
well,
a lot
dude.
of things happen.
Dude, that I was gonna say that when Arab told me what you do and the fact that that's the card is creator centric, I thought that was a genius idea, because I've been in the scene for a long time, and I've actually seen close friends of mine that have I'm 100% sure hundreds of thousands of dollars in their bank account not be able to get any sort of loans because they don't have what they would consider legitimate proof of income, of a solid income. You know what I mean? Like they don't understand what it is. You know what I mean?
Well, here's the thing too. You say loans, and like everybody listening, he doesn't even just mean like loans that, buying a house or buying a car or needing a business loan. No, like literally people have credit limits of $500 and they're still using their debit cards because they can't do anything, and they're missing out on so many rewards and basically like perks of having credit cards and building that credit history over time.
Yeah, That's exactly right. Both of the points you made. We work with one Twitch streamer named Alexandra Botes.
We know who she is. Test streamer.
Yeah, and the reason why we work with her is she's brilliant. She's absolutely killing it as a business. Before that, she went to Stanford. She's a smart cookie.
Wow.
And when she tried to get a business credit card, she was rejected multiple times. It wasn't even, here's one with a $500 limit. It was straight up no.
Yeah.
Because you walk into a bank as a creator, hey, you're CEO of a media business, but banks don't see you that way. They're looking at you and saying, well, you don't have a ton of credit history. You don't have business history. You're not a W-2 employee working for another company. How am I possibly supposed to trust you? Even though you might have thousands of followers and great income. And that's the experience, Edwin, that your friends likely had. Despite having really good cash in hand, it's not what the banks actually look like when they're trying to underwrite you.
Yeah, I actually had a friend recently. He purchased a house. He's strictly a streamer, YouTuber, creator, and he said that because the company he went through, the people that underwrote him, they I think marked him as like some sort of risk, and he had to put down more money than like a regular person that has like a regular job would have to put down for them to make the mortgage work or something like that. It was an issue with the fact that they didn't completely understand where his money was coming from. You know what I mean?
It's discriminatory. One of the earlier streamers we worked with was this guy called the Russian Badger. And he told us the first time he went to set up a business bank account, they literally asked him, like, do you launder money? Like, is this drugs?
Well, the thing is, too, I mean, you're looking at most creators go from making almost no money to making a lot of money instantly, because the way it happens is that instant blow up, right? So, like, you can go from making $500 a month, literally $0 for 2 years, to $500. And then the next month you're making, 5 to 10 grand to 20 grand or whatever it is. And you haven't had time to build up. You're basically investing the time up front, and then it happens all at once. And the banks don't really understand, like, where's this coming from? So like you're saying, they look at it and they're like, what the fuck is this? And second of all, what the fuck is Twitch? you know, or what is
yeah.
like YouTube, like what do you like, or Google, or however you're getting paid. I mean, they just look at it. One, you're young. Two, you're young and you have this much money, which they're not used to, because somebody this young is normally under fucking student loan debt. And they, you know, they just don't get it. Luckily, I mean, when we met, you walked up to me with the card and you were like, you know, you showed me the card, whatever, and I pulled out my credit card. And I was like, what, is it better than this? And you're like, no, it's not. And I didn't realize how many of those creators at the table who were much bigger than me actually had really shitty credit card limits. Like mine has no cap. I can spend whatever I want on it, you know? And a lot of those people at this table who have millions of subscribers have $500 limits. And I didn't even realize that till we spoke right there at that table that night at the hotel bar. And it was kind of like eye-opening how many people aren't financially literate on like the value of credit cards and building that early. Because ever since I was 18, I've been using a credit card for everything, you know, and most people use credit cards. Like a lot of people see credit cards, and I mean, obviously this is how credit cards make money. Like they see it as literally borrowing money and then they can use money that isn't theirs, and that's how they end up in credit card debt, etc. But like I was just taught to use a credit card as money I have and then pay it off. You don't actually use it as like a loan, you just use it for its benefits. So like what people don't, anyone who's listening, you know, obviously we have a lot of younger kids who are, you know, getting into college, etc. Like the value of credit cards is you use, you know, you're loaning money, so you don't have to pay it right away. You pay it a month later or whatever. And not only that, but a lot of credit cards, especially as you get like, you start spending more and more, have perks. So like you know, if I buy all my travel shit with my American Express, I basically can get free flights. Like I can fly for free. I have fucking 10 free flights anywhere right now, basically, because of just spending money with them and being part of like their credit card company. It's just, I don't know the exact logistics on how it all works. You know, I'm sure you're more financially literate on it.
So you exactly understand. And there's a few points I want to make here, right? The first is our business credit card, which provides creators with higher limits based on social stats and financials. We don't charge any fees, and we don't even allow people to carry a balance beyond a month. Because as you said, Eric, for a lot of people, this is a new concept. But it's an important one to understand, because as a business, the faster and earlier you can make content, the faster and sooner you're going to blow up. And having a little bit of working capital can really help you, not to mention getting the rewards that cards provide and separating out your personal and business finances, which helps you from a tax perspective. Many of you might have heard Mr. Beast recently did an interview with Colin and Samir. And Mr. Beast talked about, in a year, he's spending $55 million. And people are like, wow, that's nuts. Because for Mr. Beast, he grew up by literally taking all of the money he made from one video and putting it into the next to make it bigger and better. And think if you have access to working capital and a card, it becomes so much easier to do that, to buy yourself a little bit of time to reinvest in your content, to continue growing more quickly.
Right.
But to your point, a lot of people aren't aware of that and they don't talk about this.
Did you say that you don't allow people to carry a balance month to month? Like how does that work? Like it's like a charge card kind of?
It's a charge card. So our card today, it's like the OG American Express cards.
That's crazy you say that. That's crazy you say that, because my very very first credit card was an American Express Gold. I was 18 years old, and the person that helped me get it was my brother-in-law, who was helping me with like being financially literate. He helped me be his I was the custodian for his self-directed IRA. He just helped me learn a lot about finance, and he put me in a position where he got me that Amex when I was 18, and he told me, he's like, this is a charge card. He's like, this, you have whatever you spend on it by the end of the month, you have to clear it, but there's virtually no limit to it. Like the one that I had literally had no limit. Like I could spend $100,000 and it had no limit, which was a crazy thing to give an 18-year-old, but that's interesting. And why is that? Why'd you guys go down that route instead of the traditional?
So first of all, your brother's awesome.
Yeah, for sure.
Second, similar to you and your brother,
Edwin's like, I hate him.
Well, I got a brother too, and mixed feelings sometimes, but I love him deep down. And Arab, I remember you also said you had a lot of close family and friends, right, who were also very financially educated.
Yeah, yeah. So my mom had me under like a family credit card, like under her name. So when I was going to college, like
Authorized
gas and
user.
stuff, I would put on
you're
it.
authorized user.
And
Yeah.
I think that built my credit as well. I'm not sure if that's how that works.
Yeah, it does. It does.
Yeah, and then when I started making money and working, etc., like everything was on a credit card. Like the only thing I use debit for is an ATM. And my brother is real big into like, loans and spending other people's money to make money, like shit like that. And he's super financially literate. He runs a marketing company. So yeah, he helps, just with those things.
Both of you had the benefit of people you knew and trusted to walk you through this.
For sure.
That's what we're trying to build for creators, a trusted financial source of education. And to answer your question, Edwin, you said, well, why did you start with this charge card?
What is a charge card, first of all? Because I don't even know what a charge card is.
Literally a card you have to pay off at the end of every month. It doesn't let you carry a balance. So it's safer for people who are just getting started because they're never going to run into a situation where, hey, you weren't tracking your spend and now you've built up a balance, right? Because you have to pay it off at the end of every month.
Wait, so is that basically like what a Chase Freedom Unlimited is? Or is that a credit card? Because I mean that one you kind of pay off at the end of the month. Like my Chase personal card, there's not like much of a turnaround. There's like a few days at the end of the month, I think, as opposed to the Amex, which is like a month.
Yeah, so any card that you have to pay off at the end of every month, and usually have a month of grace period too, just to be clear. Like that's a charge card versus a regular credit card. You can just keep paying a minimum amount of that balance. Over and over.
Oh, I get what you're saying. Okay. So you don't get to pay a minimum. It's just the difference is it's basically a credit card, but it doesn't let you pay like that minimum $25 fee where you can acquire an interest rate on it. You have to pay it in full.
Exactly.
But you do have a month grace period.
Yes, exactly.
But they have to pay it in full.
Yes.
Okay.
Precisely.
So it is. So for anyone listening, like the kids that are younger, let me help explain it in like layman's terms. So basically, a credit card, the way the banks make money is a lot of people spend other people's money, and what they'll do is they'll pay. You can either pay the statement balance, which is what you owe, or you can pay a minimum, which is a $25 fee normally. And what'll happen is, let's say you have $1,000 on that statement, you're gonna get an 18% interest rate on it. So you're gonna end up paying $180 that carries over to next month. And that's basically like if you're risking or using other people's money and you need it now or whatever, blah, blah, blah. So he's saying whatever's on that statement balance, you have to pay. So you pay the $1,000. You don't have the option of paying the $25 fee, which is a good thing because you never want to pay the $25 fee minimum because people think like, oh, I get to pay less, but then they acquire all this fucking interest and it just adds up.
Yeah. So the main difference between a charge card and a credit card is that a charge card is essentially a credit card, but you have to clear the balance. You cannot pay a minimum. And the thing is, it's not only that you can't pay a minimum, but you can't pay a specific amount. Like, because with a credit card, you can have a balance of $1,000. Let's say the minimum payment is $50, but you can choose to pay 500 of it off. Like a charge card, you have to pay it all together, like at once. And the other thing is like the month-long grace period. It's a grace period, but like you're not supposed to do that. You're supposed to pay it off month to month. The grace period is like if you exhaust that grace period, they're gonna send you to collections, and that's not good. So like basically, a charge card is like you basically have a month. You from the 1st to the 30th of the month to the next month to pay it off, and that's just how it is. But the cool thing about charge cards is that you don't have a limit a lot of the time. The limits are a lot higher for a charge card if you get approved for one than for a credit card, because a credit card, the banks are assuming that if you are getting a credit card, you're probably going to build up a balance, you're probably going to pay some of it off, you're probably going to have a running balance, and they're okay with that because they make the interest. With a charge card, they know that you're going to pay it off all at once, so the limit is higher. The limit is like sometimes unlimited, you know what I mean?
This is exactly right.
But you do have a month to pay it, right? So like let's say my October statement balance, I have till the end of November to pay it.
Yeah, usually you get at the end of the month, and ideally you pay right away. But depending on the card, usually there's like a month after the bill date that
without
you have
fees.
Yeah, without
So,
fees.
so it is a standard credit card, basically, without the ability to pay less than you owe.
You have to pay in full.
Yeah.
So the thing is that grace period isn't like a grace period that you're supposed to use monthly. Like let's say you get a bill and it says it's due on the 1st. If you don't pay it by the 1st, you have about a month until they send it to collections.
Well,
so
no,
like,
you pay right away, right? Well, that's what I'm wondering. So for the month of October, do you bill me on November 1st or do you bill me on on November 30th?
I think it'd be November 1st.
There are cards that do both.
Okay.
So for some cards, like the month of October, it's like, hey, you've got to pay like November 1st, right? But look, there's a month before they'll send you off to collections, right? There's also cards where like, hey, for the month of October, you just don't have to pay until end of November, right? It's not like grace period. They're just straight up like, hey, you have a little bit of time.
Yeah, the ones that make you pay. So let's say your card says that the payment is due November 1st. What he's talking about when he says grace period, it's not like it's a grace period between the time where it's due and you're delinquent long enough for them to send you to collections. And additionally, if you don't pay the credit card off on that due date, I think it's like usually there's like they give you 5 days, 3 to 5 days before they actually charge you a late fee because technically
so it's not a
delinquent.
Okay, so it's not it's not like a grace period.
No.
It's like,
no. He means grace period before they fuck your credit, before they send you to collections. Like you're not supposed to do that. Like you have between 30 and 35 days to pay it off. You know what I mean?
Yeah, because that term is tricky, and I know a lot of people listening are gonna, because like I know I'm better versed in credit and I didn't even understand that that term perfectly. You know what I'm saying? Because the whole reason I brought Eric on here is because I want these kids. I mean, a lot of people that watch us are people that want to be pro gamers or streamers or YouTubers, right? That's why they watch, because every guest we have is some sort of encyclopedia of information in that space, right? So I want them to like be able to understand it in a think
of it this way. When he says grace period, think of it, your rent is due on the 1st. If you do not pay it on the 1st, they will not evict you until you've spent enough time delinquent. So if you do not pay it on the 1st and a month passes, they're gonna slap an eviction notice on your fucking door, and that's kind of how it goes. That's what he means by grace period.
Yeah, like don't get fooled by the word grace. It just means like you haven't been a degenerate long enough for us to fuck you, period.
Yeah. And then when they send it to collections, that's another thing too. Where like, dude, people don't know, like being sent to collections, man, having delinquent accounts, like that shit plummets your credit score, and it's like that shit is tough to figure out after the fact. You know, like dude, I had this kid that I know. He opened up an Ashley Home Furniture credit card, bought his entire living room set on that furniture credit card, never paid it off, like completely forgot about it, didn't give a fuck about it, could not move into somewhere new because they put a lien on his shit, they fucked up his credit, and he just never cared to take care of it until he needed to go get a new place, and he couldn't. You know what I mean?
But he got free furniture.
Just like that meme where it's the guy being like, you get, I get. It's
yeah.
You get furniture, I get a lien on your money for the rest of your life.
So what is that? What is a lien on your money?
So I sort of just made that up. Basically, all I meant is just the same point Edwin's making. They just wrecked that guy's credit history because he didn't pay back. And so they hurt his ability to get more credit in the future.
And that stays forever until he pays it off.
Until you figure it out.
And if at that point, if your credit is so fucked up, would it be better to declare bankruptcy, or can you only do that?
It would have to be really, really fucked up. And there's people that their entire jobs are to negotiate with the companies to get. So basically, let me put it to you this way.
A company would cut its losses.
I owe you $100, right?
No,
you're
more.
Not paying.
Make it worse.
Okay, I owe you $1,000.
10 grand. You owe me 10 grand.
Okay, I owe you 10 grand. I'm not paying you the 10 grand. You then send me to collections, right? Collections is now him. Okay, so he's collections, right? Now I don't deal with you. What you've done is you've sold my debt to him.
Okay.
He now owns my debt and is trying to collect 10 grand.
How much would you buy it for? How much would collections buy it for?
Let me get through it. So I owe you 10 grand. I'm not paying you. You then sell my debt to him. Okay. Now I owe him 10 grand to clear my debt because he's fucking up my credit history. I can't do shit. Right. So now with him, he didn't actually pay 10 grand for that debt. He paid far less for it, right? You got some money. You're like, this dude wasn't going to fucking pay me anyways. Whatever. I got 5 grand, right? So you get 5 grand from this guy.
Right.
Okay. So now he only needs to get 5 grand out of me. So I can now call him, which, I would do it because I'm financially literate and I would just handle it myself. But there's companies that do it for you.
Dude, let's do that to companies.
Where you fix,
and make 40% on the dollar.
They would basically call on my behalf to him and they'd be like, hey, Edwin owes 10 grand to this person. He's not going to pay 10 grand. Is there any way that we could lessen this amount so he can, fix his credit? And then you haggle back and forth and eventually they'll settle on anything over the amount he paid for your debt, right? And that's collections. Now, what we were talking about earlier with a lien, that is another financial tool that's used to fuck you if you don't pay your shit. An excellent example of this is when you take your car to a mechanic. Let's say you take your car to a mechanic, they do all the work, you don't pay for it, all right? You cannot get your car back. They'll put a lien on your car, and if the lien stays for long enough, they can eventually just own your car. They can possess it. Or let's say somehow you get your car back, you will not be able to sell it because it'll be a registered lien to their name. You know what I mean? So if you sell the car, that money goes to them. You know what I mean? And those are two ways that your credit will just absolutely plummet.
Okay.
Collections, liens, etc.
So you have a charge card for creators and you help creators get money. Your program is invite only, right?
Yes. And so Edwin, you know more about collections and cards than like 99% of people. And Arab, you've really been very experienced with credit. Edwin, you asked me in the very beginning, why did we structure this card as a charge card? And the reason is, I worked with tons of creators when I was at Instagram, right? I helped build Instagram Live. I said, okay, cool, they need this, but it needs to be built in a way that's safe, that protects them, because they might not have all the context that you have. So Arab, to answer your question, the card itself is a charge card because we don't want you to carry a balance, because we are never going to charge you interest. Like a normal card tries to make its money off of you owing them money. So we said, we're gonna align our incentives. I'm not going to make interest even if you are late. I'm not trying to put you in debt. I want you to pay this card off over time.
So you're thinking long term. Right now, you're not even making money.
Yeah, so today we make a little bit. When you swipe the card, there's a credit card processing fee called interchange. The store shares back with us, the card issuer. We basically take that and give that back to the creator as rewards, because our long term is making money from building more financial products for use down the road. You like our card? Now you're coming to us to help with your taxes. Now you're asking us to set you up with a
yes. Oh my God, that's so smart, because that's the other thing, bro. CPAs and tax people do not understand this industry at all. And absolutely the thing is, do you know what fiduciary responsibility is?
Yeah. Okay,
so CPAs, when they become a CPA, a fiduciary responsibility is a CPA, a lawyer, people like insurance people. They have this thing called a fiduciary responsibility that coincides with their licensing, that they get to be these positions. And what it basically means is I have a responsibility to you as my client to not put you into a situation where you will be harmed because of something that I know that I'm not sharing with you, or just, a lack of information, etc. So, fiduciary responsibility for a CPA that doesn't fully understand what you're doing would be, so an example of that where it comes to bite creators in the ass is if you come to a CPA that does not know entirely what a Twitch streamer is or does, and you're like, hey, these are all my Fortnite skins that I want to write off because this has to do with my job, this has to do with what I do, a CPA will look at this and be like, dude, I don't know if I can do that. In my brain, with my knowledge that I know of my career, this does not make sense to me. And if you get audited and I have to answer for this, I will not have the ability to explain this. So my fiduciary responsibility is to tell you, no, you cannot write this off. And if you want to write it off, then that's on you. That's not on me, because there's this thing called E&O insurance, which is errors and omissions, which is basically insurance people, CPAs, people that deal with finance, errors and omissions insurance.
Errors and omissions, right?
Errors and omissions, yes.
Errors in omissions.
No, errors and omissions.
Okay.
So what that is these financial professionals pay an annual premium to be covered by a company for errors and omissions, which means if I'm a CPA and I fuck up something and it costs a shit ton of money that I don't have to pay because I don't have that much money as a CPA, the errors and omissions people will cover it because I paid the insurance, right? So errors and omissions, fiduciary responsibility, those are two things that won't allow CPAs to let you write off a lot of things that you should be able to as a Twitch streamer because they don't understand it. You get what I mean? That's why finding a good CPA that fully understands this industry is very hard still today.
So going back to that, you're saying that you know, put that back into rewards or whatever and things to use back on the creator. You have tax people that understand creators?
Yes, we do. So the way we make money as a company, and just for the listeners out there, our vision is not to build a credit card company. It's to build a bank and a full set of financial products. So for us, we really see this card as our first product where we want to help creators understand the importance of getting all of this set up. But we make money if you end up using these other products and services that we're going to develop and build. Because I'll tell you, we started with a tax product, walked around some of the biggest YouTubers and Twitch streamers in the world and said, hey, do you want to use my tax product? Most people don't care, right? Because like you're focused on making content like 95% of the time, 5% of the time you're going to think about taxes. Rando guy you've never met before walks up to you and starts talking. You're kind of like, okay. So we realized the right way to do it is just what every other bank has already realized. You start with the card. Like Chase has Chase Sapphire Reserve. It's a great card. People who use it are more likely to switch to Chase for their bank account. That's actually where Chase makes money. So for us, it's like, cool, we have the Karat card. It's the best business credit card a creator can get. We don't even charge you fees. We give you higher limits and rewards because we're betting on we're going to develop our underwriting model. And then when we've launched our other products, you're going to know us. You're going to trust us. We're already integrated with your financials. You're just going to go use Karat. And then we will make money off doing tax for you.
Dude,
and
you're going the freemium route. I like it. You're fucking, you're giving them the game for free, and then when they want to buy a skin, they buy the skin. That's cool. I like that. That's
love
really that's really fucking smart because you know what? The thing is, you as the most creators that you're gonna be a part of their lives are typically younger, right? They're 18 years old. They're 19. You know, they're just now coming on some money, etc. You're gonna grow with them because when they go from being 18 to 26 to 30, and at 30 they're gonna want to buy a house. By that time, you'll have underwriters, you'll have a whole mortgage team, etc. That's fucking cool, dude. That's
you get it. And by the way, the card's been around for about a year. We already see this. Our average cardholder has had income and social stats grow more than 40% during the time with us. Because when you pick the right creators, of course they're going to end up doing better. Like we worked with ZHC when he had around 15, 16 million subscribers on YouTube. He's over 22 million now.
Right.
And that's where like, here's this opportunity for us to build more. Just to give you a little more context to both of you and to the viewers. So my background, before starting this company, Karat, I built products at Instagram for creators. But before that, I went to Harvard and studied economics and worked in investment banking on Wall Street. So I'm familiar with, okay, how do banks make money? Well, a lot of it is they're trying to put fees up front. They're trying to think short term. Let me get you to take out credit card debt and make interest off of that. And now there's this new model emerging, which we're part of, which is like, no. What if I made money through the long-term relationship? It's not just the card. It's this full set of products. But I can give you better service since I'm integrated to your financials and you know and trust me. It's the Square model. Think about Square. They started with one product that helped mom and pop coffee shops accept payments, that little rectangular dongle that you go swipe on. Now they have Cash App, they have payments, they have capital products, they have tax and bookkeeping products because they built so much trust and data around their first product. They were able to make money on extending into all of these other things. That's the new model that we're following.
Right.
Now you're saying you offer these products to your creators, and what they're just like a fee like any other product would be. So like I want to use your CPA, I would pay just like I would pay a regular CPA. Like is that what are these kind of products you're talking about? Like my question is, what's stopping me after I use Karat and build my credit from leaving your card and going to a card with better benefits? So for everyone that
you totally absolutely could.
So because I want to explain to them how the benefits work, because I mean I just got my Amex Platinum, which is like probably one of the best cards you can get on the market. It costs $700 a year, but within the first 2 months, I've already made that money back off of the card because I've used the rewards correctly. Like I studied it. I sat there with my friend. I saw what you can get. They give you discounts to certain stores. You have, discounts to airlines. You have lounges access to. Like there's rewards with these things. What's stopping me? And that's why I tell people to like. We just got our other friend on credit cards. We fucking sat there for 3 hours and persuaded him to get a credit card. And he's like, why would I need one? Like I'm never gonna use these rewards. I was like, dude, like think about it this way. Whatever you're spending, you're already getting 2% back basically. Like, if that's not enough to tell you stop using this card and just use this card for no difference, like there's so many rewards to these things, but Karat doesn't have those yet.
So we do. So here's how I'll describe it. We give better rewards than 99% of cards out there. So we give 3 to 5% cash back in 3 different categories. Could be Twitch subs, could be inventory, could be computer equipment, and we just give it in straight cash, and we don't charge any fees. Now, the point I was making was there's going to be perks your Amex Platinum has that we don't offer today because we're still working and building it out. We don't have, for example, on a lot of these Amex cards, you can get like private access to lounges. You can get like,
concierge, bro. Someone will go fucking, like someone will go tuck your mom in at night for fucking, no, it's crazy.
Like you can get car insurance when you book cars with those cards. You can concierge. Yeah, we don't have all of that built out yet, right? We're a startup. So on a cashback basis, we're actually right there among the top cards. But Amex Platinum has a whole level of other benefits that we don't yet have. There's
of course, and I'm comparing you to like literally the top card, right? So it's like one of the top widely accessible ones
for everybody.
Exactly.
Yes, totally.
So like obviously it's an extreme, and most people that are with Karat though, like the people you're targeting can't afford that. So once they build that, once they understood those benefits, why stay with you is what I'm asking.
The two things. First,
first year or two they used you and they built their credit. You gave them what they needed, but why? I mean, they can have the card. Like I have cards, but I spend $0 on them. You know what I'm saying? It's like, what is keeping them with you?
Yeah. So our underwriting is unique to creators. Theoretically, at any level, we should be able to give you better terms than a normal bank. So even as you grow and scale, we should be able to continue providing you with better limits and better rewards than other cards out there. Now, if we can't, that just means we failed at our job, right? Maybe because, hey, our underwriting was not as good as we thought it was, or because, hey, we still haven't built out the full set of benefits that we want to offer to you that other existing cards out there have today. So what I would say is, yeah, if you've grown and you've scaled and you're like, wow, I can get better terms and benefits from another card, you absolutely should switch. Now, my goal is that we grow with you, that we're
That's what I'm wondering. So what do they get from that? Because like you say that, but at the end of the day, you're a credit card company, or not a credit card company. You know, we're
a financial product company.
Yeah, you're a financial product company and they're a creator. And sure, you help them, but it's business and it's what is going to benefit me most in this business. You know, it's not like I said, fuck you and I screwed you over. It's more like, all right, I used your service for 2 years. I built my credit, which is what it was, what I needed it for. Why not? It's time to grow. And you're saying like we grow with you, but what do I get in the future from you growing with me?
I mean, there's really 2-3 things, right? The first is higher limits. I mean, Eric, you're at a point where already you have super high limits. There are creators out there who, even if they try to churn off and go to Amex, they can't get a 100K limit right out of the gate, because even though they have so much income and business revenue, that doesn't mean their credit history is good, right?
Yeah.
But let's say, cool, they've improved all their credit business history, right? We're building a feature where we're going to help people do credit building, right? We haven't released this yet. Say they go and you're like, Arab, you're like, hey, 2 years from now, my credit history is amazing. I can go and get these really good limits from other banks. Like, where are these limits and rewards coming from? It's all off of underwriting. It's all off how much I think you're worth as a business to me. The more I think you're worth, the more I'm going to give back to you as rewards to keep you on.
So what rewards are we talking about?
Hey, real quick though, before we continue, because we've been using the word underwriting a lot. Let me quickly explain what that is to people that don't know. So underwriting is basically a process where the financial corporation that you're trying to get a card or a loan or something out of or from, they look into your credit history. They assess you as a risk in general. They basically dig when it comes to the past income you've had. The thing about underwriting that's so interesting to me is especially because when you go to take out a new credit card. So when you go to take out a new credit card, when you go to take out a loan on a car, they actually ding your credit. It's called a hard request.
Yeah, a hard credit pull. There's soft inquiries and hard inquiries.
Inquiries. Yeah. So a soft inquiry is like if you go on Credit Karma and they generally have a score for you. A hard inquiry is like they really, really look at your credit and it affects your credit negatively. A hard inquiry, it'll take your credit score down a few points, and so that's a part of the underwriting process. Which once again, I guess in layman's terms, is to just determine how much of a risk you are to them and how likely you are to be able to pay your bills based on your past careers, your income, how consistent it is. Like let's say you work a job and you have a hard income of $5,000 a month. They would probably rather that than you make $10,000 in 1 month and then $3,000 for the next 4. You get what I mean? Like they want consistency. Like underwriting is it's a pretty extensive just background check when it comes to your credit. That's what underwriting is. Anyways,
let me actually give a little more context on underwriting and credit pulls before answering Eric, going back to your question on why would they stay with us, how the rewards get better, because I think these two actually link together.
For sure.
Mm-hmm.
To your point, Edwin, 2 things. Number 1 is our card does not do a hard pull on your credit when you open it, because we know so many creators don't have good credit history to start with. We operate entirely off of financials and social stats.
That's cool.
So that's why I say we're trying to build a new system of underwriting. And eventually we'll integrate back in with FICO, which is the traditional way of assessing your credit. Because for many of these creators, the traditional ways aren't capturing their true worth as businesses. This leads to my second point. So the traditional credit history score is called FICO. This is what Edwin was referring to when they're doing an inquiry. They're checking, hey, were you credit worthy? Should I give you more money? FICO literally stood for the Fair and Isaac Company. It was invented by 2 white guys in the 1950s named Fair and Isaac, who named it after themselves. If you formed the Arab Edwin Company, AECO, and they're using it 100 years from now to, I don't know, underwrite Blade Runner or whatever, right? Whoever it's going to be happening 100 years from now. So here's a great fact. FICO is really outdated. FICO doesn't actually care about how much money you're making or how much money you have. It only cares about when you've taken debt out previously, have you paid it back? Which means you're making $1 million a year, but you've never taken out a loan or an auto loan or used a credit card, you will not have great credit history.
And not just that too, but they take into account the amount of accounts you have. So like the amount of credit cards, the amount of loans, the amount of things that you've had to pay for at any given time. They take into account the length of time from the moment you got your first credit card or piece of credit to now, and that affects your credit too. Where like if this is your first year obtaining credit, that part of your credit score is gonna be shit. You haven't had credit for fucking 10 years, and that part doesn't get good until you get like at least 5-7 years in. So there's categories. Like he was saying, like, if you've ever taken any sort of loans or money out, your ability to pay them, if you've ever been late on any payment, if you're ever late on anything, bro, they know. If you're late on an Amex payment, they know. If like I said, amount of accounts, like they'd rather, for some reason, they'd rather have somebody that has fucking 5 credit cards out than somebody with 1. If you have 1 credit card out, your amount of accounts is not good. You know what I mean? And
which is crazy flawed, by the way, like how the system was set up.
Correct. And I actually have a question for you, because I actually haven't gotten a straight answer, and I haven't really had to look into it. But do you know if medical bills, because I know college debt, like if you have a student loan, that gets reported to FICO. But I keep hearing, and this is my own fault for not looking it up, but if you have like, let's say $100,000 in medical debt, does that get reported to FICO? Because I know it's not supposed to, but I think it does.
To be honest, I'm not sure. It could be. Part of the issue with FICO is it's so opaque. There's not like a clear set of metrics and guidelines, like what goes into it and what doesn't.
Yeah.
Right. The critical part, Edwin, that you're touching on is it's mostly dependent on the previous debt you've taken out, which again means weirdly, I am making hundreds of thousands of dollars as a Twitch streamer, but in the eyes of a bank, I have no credit history because I haven't taken loans out before. Right.
Yeah.
So that's really beyond credit cards and financial products. We're really trying to build an underwriting layer for creators. We want to be the ones to understand you and then translate that back to the banks and tell them, okay, cool, you don't get them, but we do, and trust our underwriting model. That's really the vision of what we're trying to do. And so go ahead.
On that note, I had a question for Arab earlier, and you know, I figured I'd just ask you. Is part of your underwriting process, underwriting meaning risk assessment and just understanding the person as a business, when you say that you base the amounts that they're allowed to work with based on following and stuff like that, when you underwrite, do you take into account the
engagement
or the interaction percentage? Okay, that, I mean, I would assume so. You know what I mean?
Yeah, like you're looking at somebody with 1 million followers and they get 127 likes on their Instagram photo.
Yeah, exactly.
You know, it's pretty obvious that they're botted or something,
And I figured engagement was an obvious like underwriting thing you guys did, but is there any other specific creator metrics that you look at? And if so, what are they?
Yeah, I'll go into some of those. A couple more points. Also, we do look at financials as well, just to be clear. Also, you'd be amazed. Engagement seems to the three of us an incredibly obvious metric you should care about. I spent half of my time in the
People don't care about it.
I spend half of my time in the traditional financial world. They have no idea what engagement is.
They just see followers.
Exactly. And so like some of these things that are so basic to us, it's my job to translate it back to them because they're like, engagement? What is that? Some of the additional metrics we look at, like things that we've learned. Here's a really great example, how you monetize. You, Edwin, you literally talked about this earlier. Hey, steadier incomes are better than spikier ones, right? So depending how you monetize, if you're getting monetization via, for example, Twitch subs or Patreon subscriptions, OnlyFans, or even Google AdSense, that's a lot more consistent than like brand deals, right?
Yeah.
If you're like a TikTok or Instagram focused creator, you're not really getting that recurring AdSense or sub revenue. You're really dependent on brand deals. That's really, really spiky, for example.
Yeah.
Like here's another thing we look at. The nature of how you built your following. For example, on Instagram, you know, there's tons of people on Insta who have like over 100,000 followers and they're verified because they were like a pro wrestler 15 years ago.
Yeah.
Yeah, true.
Like,
oh, trust me, Twitter's worse right now.
Yeah. Oh, yeah. Like literally,
Twitter, you can have 40 followers, and if you're on somebody's esports website, you're verified.
Boom, you're verified. Exactly. Yep. And so basically, like, it's not just the number of followers, it's also the quality. If you are somebody like, you know, Ludwig, right? He's grown up on Twitch. He's digital native. Ludwig wasn't famous before he got on Twitch, but that means every one of his followers follows him for his personality. And the things he does, they follow him across that versus, hey, I was a pro wrestler 15 years ago. Cool, I'm going to get like 100,000 plus followers on Insta, but they don't really follow and engage at the same level when that pro wrestler now, I don't know, goes and launches like a line of energy drink products. They might just be like, Like, these are the sort of things that we look at. We look at the platform.
Like relevancy and stuff like that?
Yeah, exactly. The nature of their follower base, the type of community and content that they make.
And you do a full scan on all their socials.
Yeah, to be clear, we don't require like credentials into any of the socials. We just use what's publicly available. Same way Social Blade, right? It scrapes a lot of that, right?
Yeah.
Now, as we couple that with financials. We use a company called Plaid, Plaid. So it's a multi-billion-dollar company. The co-founder is an angel investor in us. If you've ever, actually, side note, this might also be helpful for viewers. We've raised over $30 million from the founders of YouTube, Twitter, Twitch, CEOs from Wealthfront, TikTok, Plaid, because everyone's slowly realizing this is a huge opportunity. So Plaid, if for viewers, you've ever logged into your bank account when you're in like Coinbase or Venmo or Robinhood, because they're like, hey, you should connect your account, you've used Plaid.
Yep. Yep, that's like the third party login system where it'll do a drop down of like Chase, Regions, like Wells Fargo, stuff like that. So yeah, Plaid. I think Acorns uses that. That's the way you log in.
Acorns uses Plaid as well. That's exactly right. And so
Yeah.
that's how we're underwriting better. And now, Arab, I'm going to go back to your question. Like, why the heck would somebody stay? Well, my hope is because I'm underwriting you, I'm understanding you as a business better. I'm going to value you more highly than a normal bank. So I'm just going to give you higher rewards. Now, how am I able to give you higher rewards? It's a math equation. On one side is the revenue that I'm making from you because you're using other products. You're paying me these fees to use my tax product, my business bank account, whatever. On the other side, my costs are, how much I have in defaults and how much I'm giving out in rewards. So my hope is with my underwriting, American Express might be like, Arab, you're going to like spend this much money over time and use these products. And I'm like, no, actually it's twice as much because they don't understand the nature of your business. And maybe American Express is going to have this level of defaults. Mine are going to be lower because I understand you better. So I have a little bit more margin to give back to you in terms of those rewards and benefits. I'm not saying we have this now, but that's the basically plan of how we would be able to compete.
Gotcha.
And so you plan on giving loans, et cetera, out and being like a full-on bank eventually?
I like to think of us as building Square for creators, right? Just like Square started with a payments product, right? For SMB businesses. Now they have Cash App. Now they have bookkeeping and accounting tools and capital lines. They have like this whole set of financial tools. That's what we want to have. I don't want to say bank because banks are the traditional version of how this all worked, right? Hey, I'm a bank. I help you with savings and lending and payments. And, I don't do any of that well, but you come to me because, I don't know, your parents set me up on me 10 years ago and like it works. This has changed. Now, everyone, they use Venmo, they use Cash App, they use Acorns, they use Robinhood. It's all being broken apart. What you once upon a time would have gone to a bank for everything, everyone has carved a portion of that and built a digital product just around that piece. And we're the next step. It's not just around payments and savings and lending. Now people are building financial products around populations. You're a creator, you're a student, you're an immigrant. People are building financial products just around that particular segment. So for example, Current and Step have built financial products specifically for young adults and teens. That's like what we're doing, but for creators, right? It's a vertical focused play.
Now, how hard are you advertising through creators at all or no?
We don't pay any for creators.
Because it's invite only.
Yes, and the credibility piece is so important.
Okay.
How
them being paid takes away some of the credibility.
Exactly. Like
even if they use the product, it takes it away because they're being paid rather than telling you.
Exactly. If you go onto our Instagram, it's TryKarat, TRYKARAT. Look at her stories.
It's linked in the description too.
Yeah. Oh, awesome. Go to TryKarat.com. You'll see we work with some of the biggest creators in the world, right? Graham Stephan, right? Eric.
Right.
Alexandra Botez, Blau. Like all of these people, right? They actually use our product. We're not paying them anything, right? And that's really important because, hey, as a creator, there's so many things you're pumping around to your followers. I'm like, no, this isn't for your followers. I don't care if you share it at all. In fact, I'm not going to ask you to, and you don't get anything for sharing
it. Well,
I
mean, I asked you to come on because I wanted our viewers to be more financially literate because I think it's such an important thing that, dude, the benefits of credit is crazy if you're using it correctly. Like, I love talking about it because I've had it for 2 months and I've been abusing it. But like having a credit card and having access to all these perks, it's like you just
superpower.
Exactly, bro. Like I can go into the airport and get unlimited alcohol for 10 hours straight if my flight is that same day. You know what I'm saying? Like there's so many just like and one, not only that, it's great for networking. While in there, like I spoke to a bunch of people and some of them turned out to be in the esports scene or whatever, etc. And it's just like, just having credit cards that are what do they say?
You establish yourself. You establish
exactly.
yourself within a group of peers, like people that
Exactly.
You're like, oh, we're in the same lobby. We're in the same little American Express thing that I know you have to have some money to be in. So you're a peer of mine. You know what I mean?
Even
Like, we're
so,
on that
like
same level.
with Karat, they'll be like, oh shit, you use a Karat card, like you know.
You're a creator. Yeah,
Exactly.
Yeah. And also I would go back to like when you were asking like why somebody would stick around with them instead of just going to go get an Amex. Dude, your Amex makes a lot of sense for the way you live your life. You travel a lot, so you get, you get flights, you get all that stuff. To a lot of creators that fucking sit at home and don't actually travel that much but still have a lot of followers, they don't want to pay $700 a year.
Well,
for
it doesn't benefit them. It's a travel card.
Exactly. So it's like different circumstances for different people. They need different things, and I think that his just kind of facilitates the people that get denied for a $500 balance card when they have millions of dollars type shit. You know what I mean? Like, it's one of those situations. And I think that you guys targeting the creator ecosystem is really fucking big brain, because nobody else is doing it. And I would also venture to say, for some reason, no one has an interest in doing it. I have not seen any financial institute ever even bat an eye to that.
They're oldies.
For sure. But
yeah, go for it.
I had a question real quick. It was fuck, what was it? No, I forgot. Go ahead. My bad. I'll remember it.
I was going to say, this is what's changing. We're the new generation. All of us have come from gaming and media entertainment, and we're finally getting old enough that we're now becoming business owners and changing how things are done. So like you said, well, why hasn't this been done before? Like, I mean, I went to Harvard. I worked on Wall Street. I worked at Instagram. Like, I've been playing video games since I was a kid. I've been following the scene forever. Like, if I just like grab down, my place is a mess. Like, I grew up on Super Smash Brothers.
My man. Right? Yes.
Like, I went to Evo, I went to DreamHack, I went to tourneys. Like, this was my life, right? And so you're seeing a generation of people like me. I grew up in this scene, and now, like, oh yeah, I have like the business credentials to go and raise money and build a financial product. But I also literally came from the areas of people that I'm building for. That's what's changing, Edwin. We are the new generation.
Hey.
Building and being aware.
Who do you mean?
Ask that. I knew he was gonna ask that.
Of course, Peach.
Peach.
You
seem like a person that mains Peach.
Oh, yeah.
No, Peach is fire. Peach is good.
Yeah.
Peach is good.
Also, I am ass at wave dashing and shuffling, and the reason I picked up Peach is you don't have to do any of that if you float cancel.
Fair. I used to main Luigi because of his taunt.
Yeah.
Well, no, the kick taunt spike off the map. You know what I'm talking about?
Wow, you were a VM player, man. You're just.
I'm the VM player.
Yeah.
I'm the VM player. I play Kirby and I sit on the edge.
He's a piece of shit. He's a piece of shit.
I play Kirby and I sit on the edge of the map and I suck in, and and I just suicide off and then spit him out and go back up.
Bro, I played with him and he sucks me in. He goes to the bottom of the map. I'll like play a character that I know I can like at least get up to and grab, and he'll just fucking down B and suicide both of us, bro. It's fucked. But anyways, I remember my question. My question was so it's invite only right now, and it's obviously like you don't pay creators to advertise this card because it's not for their audience, it's for their peers, it's for other people that have that same issue that they're having, right? So at what
point in their career do they hit you up?
No, what level of the scaling are you at to where you can offer it to everyone? You get what I mean? Because there has to be a reason why it's exclusive right now, which I'm sure it's like a scaling issue, right?
Like, our goal for us is to build a multi-billion-dollar company. Like, just for context, when I say
you're a company.
Exactly. When we've raised $30 million in venture VC funding, that means I don't make anything unless like our company IPOs or sells for way more than that. Like, I see no single penny of that. And so the way we get big, right, which Edwin is kind of your question, it's two things, right? The first thing is we hope to improve our underwriting. We started with the top segment because it was the easiest to start a brand new underwriting model off of people who are already very established. My hope is we get better at understanding creators' businesses so we can go earlier and earlier stage and unlock the card.
So I have a question. Is there a way that you can patent or trademark your underwriting process?
I'm not sure on the patenting the actual mechanics, but here's the beauty of underwriting. If you're the first to do it, you're better than everybody else because they're racing to catch up and getting the same amount of data that you have and
Yeah,
building
data. Yeah.
So we will, just by virtue of being first, always be better at underwriting than anybody else out there. We're going to be better at underwriting. So we're going to see the ties between financial and social data. And so my hope is, hey, I'm going to get better and better at this. I'm going to be able to bring on earlier and earlier stage creators, and anybody else who's trying to come in, they're not going to have the data. It's going to be a lot harder for them to do.
Dude, you should look into that, because I feel like if you patented or trademarked the process of using social influence as a way to underwrite people for financial products, is actually, that's crazy, because I'm sure other people are going to try to do exactly what you guys are doing, but it's like
we already have competitors. Yeah,
really,
but we were the first.
Yeah,
and it does make sense.
Yeah.
And the second thing is, go ahead, Arab.
I think a cool thing you have is you have custom cards, right?
Yeah, exactly.
You can put your own thing on there and whatever. Like you can put your own image and name or cool.
Our whole thinking is we're going to start with the top segment of creators anyways, because they're the best to start an underwriting model on, because they can't get good cards. If we're going to start with the top segment, why not give them the best card experience ever, right?
So,
give them custom cards.
Exactly. So that's the thing I saw the other day. I saw a company called Lion Cards, where they basically take the chip out of your card and put it onto another card. You can get a gold card, you can get a whatever, because the thing about credit cards is it's cool to have a heavy credit card. That's just like when you have credit cards, it's like one of those things. It's heavy. Like the cool thing about the Amex is it's metal compared to something that's 30 times lighter. But the thing about credit cards is, when you'd go into fucking Wells Fargo or whatever as a kid getting your debit card, they give you 5 images to pick from. Fucking Star Wars, Disney, a plain one or whatever. Like you being able to put your own thing on that card is already a step in itself, because customization is so cool.
And we do that because think of it, it's marketing, right? Creators, when they genuinely believe in a product, a lot of them want to share what we're doing anyways. And if the cooler the card looks, they're going to want to do it naturally. So I would rather give you more money back in rewards and the quality of your card than spend anything on marketing, because then you're organically going to be excited and want to share it around.
Right.
Were you around when I mean, obviously, like you were like fucking, we're probably, you and I are probably similar. How old are you?
Take a guess.
Dude, like 30.
Damn, you're good, man.
31.
Are you actually 30? Okay, so you were around, dude, because I remember when I got my first Amex card, it was gold, and that was cool. But I remember when I got an upgraded Amex card that wasn't a charge card, it was an actual credit card, and at the time it was a nice one. Dude, everyone freaked out because it was see-through. It was fucking clear. Oh, yeah. Yeah, like that was the meta, and now it's the metal card. Now it's the fucking metal card that you can fucking kill somebody with.
Sapphire Reserve broke the credit card game when they were one of the first at a big scale to have like a semi-metal card. Like they went absolutely nuts on that, right? And people were differentiator. And this goes, both of you talked about this, right? Arab, you said you walk into that lounge, right? Edwin, you mentioned, hey, you're a Karat creator. We're seeing a lot of this already.
I use it for the first time. Like I used the shower in that lounge. I had a flight was dope. I had a flight that I went and recorded a video with a YouTuber, and I can't say it yet because it's not out, but it was in Denver, and I recorded this video, and the video ended early, so I changed my flight back, and my flight was in 45 minutes. So it went from being the next day to 45 minutes, and I went and showered in the airport in the lounge. I fucking swiped my card. I had fucking 20 minutes to do it because I had to get to my gate. I showered, I got a glass of fucking wine, and I ate food within 20 minutes, and I got out. And it was free. It was all complimentary because it's part of that package.
That's fucking cool. That is dope.
And I'm sure you felt amazing.
I felt great. I felt like a king. I was like, what the fuck? Not only did I shower, I had a great glass of wine, and I had fucking great food all in 20 minutes. I walked to my gate, and I didn't pay a single dollar.
And that's what we're trying to build for creators, right? Like when we met at VidSummit, we were holding a private casino night event where some of the biggest creators, Mr. Beast was there, Brian Rivera, Graham Stephan, and so on, because we have card holders who are top creators in the game, and then other card holders want to hang out with them, and then even creators who aren't on Karat today want to go and spend time with them too, right?
Yeah, I wish I knew that shit was open. I think you told us to go up, but I didn't know it was open and that everyone was up there. I would have gone. We were chilling at the bar downstairs.
No worries at all. I actually think Riz, Gamer Reacts, actually did end up joining us.
We had Riz on our podcast, by the way. We recorded one with him yesterday, 2 days ago.
He's a Karat card holder now.
Yeah.
And so that's like the perks we're trying to build. Like another one, we'll cover a complimentary YouTube channel consultation with Patty Galloway, who's like one of the legends out there who helps run analytics for Mr. Beast, right? Like we have a Discord that we add our card holders to. So yeah, we try and find
those are perks. Those are perks.
That's cool.
That's cool. You're a creator. Cool. Boom. We have this guy on our team, and we'll pay for it. There you go. Now we're talking. Those are creator exclusive perks.
I'm sold. Sign me up. I'm sold.
All right, beautiful. Let's chat after. That's the premise. It's like, hey, it's a good card. There's no fees, high cash back, and lots of ancillary things we're building. I'll tell you confidentially, one of the biggest Twitch streamers in the world was having trouble doing gift subs because Twitch was blocking him. One of our investors is Kevin Lin, the co-founder of Twitch. I went through him to the COO of Twitch and got that problem resolved for him. I'm not promising I can do that for everybody.
Kevin Lin?
Kevin Lin, yeah, he was one of us.
I know. We met him once. It was a great experience.
That's a stories, which we'll talk about another time.
He's a great guy. He's a
a fucking cool dude.
Yeah.
It's
funny because it was the day. It's funny because it was the day I met Edwin, and we had such a great experience with Kevin Lin, bro.
Yeah. When he said that name, I looked over your camera. I was like, no fucking way.
No, I wouldn't tell that story. That's the thing that we share. It was a great time, and he's a great guy.
Yeah.
He's one of the best dudes out there. He was one of the very first investors we ever had.
Dude, he's so cool. I'm telling you, we met him for 10 minutes. Great guy.
Yeah, great guy.
Likewise, I had a 15-minute call with Kevin 2 years ago when we had nothing. And 15 minutes in, he was like, this makes sense. I'm sold. And that's how someone has a high degree of understanding and conviction in what you're doing to put money in early, right?
Yeah.
That's cool, bro. That's cool. Yeah. And I'm glad this episode was hopefully everyone listening, a lot of people listening are creators in some way. We're kind of like, I'd like to say maybe the Colin and Samir of gaming.
Who, by the way, are card holders. Colin and Samir are card holders on Karat. But yes, you are the creator's creator, both of you.
Yeah.
Am I Colin or am I Samir?
I think I would be Samir. I think I'd be Samir. It's more Middle Eastern looking.
hey, and also like winding this down. I'm sure you were a little confused as to why my long-haired fuck ass knows anything about finance. And it was because before any of the YouTube projects that I was a part of blew up, I got my 215, my broker's license, and I was gonna get my Series 6.
Amazing.
Amazing.
You were saying such a degree.
What did I tell you? What did I tell you before when we called and set this up? I told you.
I was so excited.
I told you Edwin is real good at this shit.
Yeah,
I told him that.
Dude, like trust me, I love creating. I love being a creator, but dude, I just have this thing for business and finance that it just fucking I love it, dude.
Edwin, I'm actually gonna send you over the deck we used to raise our Series A, right? Just so you understand. And of course, Arab, you're welcome as well. Just to understand more of the business financial part of what we're actually building. I'll say both of you,
I will invest 15 million.
It's like both of you know more about the intersection of the creator world and the financial world than like anyone I've met before, right? Like it is a growing need that overlaps both of these two segments, which is why we're talking today. But like both of you are on the cutting edge. Most people know a lot about finance or they know a lot about creators. It's that intersection.
We have a different mixture too. It's like it overlaps a little, but he knows some things and I know different things. So it's like it's a good partnership.
So, and the biggest thing that actually saddens me to think about is the fact that all the things that we just talked about, they shouldn't be a fucking secret. They shouldn't be a thing that 99% of people don't know. It should be a fucking school, your freshman, sophomore, junior, and senior year of high school. Like that like this financial literacy is actually very
Sorry, but I'd
level.
rather learn fucking American history for the 6th year in a row.
No, but like even like the higher level terms that we were discussing during this podcast are still very low tier. That like they're still very surface level of financial understanding, and the fact that 99% of people don't know what fiduciary responsibility means or what underwriting is like isn't good, because most people, they will never hear the word underwriting until they get a mortgage, and that'll be the first.
And then
maybe
it's too late.
Yeah,
Then it's too
exactly.
late. And then they come and they're like, why are you requiring me to put like 100% cash down? Like, this makes no sense.
Yeah.
By the way, it has happened. I've had YouTubers being like, I could pay for the whole thing in cash, but like, I don't want to.
Yeah, exactly.
Yeah, I was always afraid of taking loans too, up until recently. Just like,
Well, that's why, like, so our product, it's a business credit card. It doesn't even do a FICO pull. It protects you. And later this year, we're going to be releasing a personal credit building feature. So you get to literally start the safest way possible. Hey, business card, not going to hurt you. And then activate a feature that will help you build that personal credit, because this is how you break the chicken or egg cycle where I don't have debt. How can I build credit history?
so how does a creator go about, let's say I'm a decent sized creator. I have, you know, maybe let's say 80,000 subscribers, but my channel is a really, it's a finance channel, and it's producing, you know, high ass CPMs. I'm making 10 to 20K a month. How do I go about getting a Karat card?
First of all, you know a lot. You're absolutely right. Personal finance CPMs can be like 20.
Yeah.
Like they can be like really, really high. That's a great case where even if you only have 80,000 followers, you could be making more than people with like 200,000, right?
Easily,
Of course.
easily.
Exactly.
Yeah, 100%. And by the way, again, this nuance, you think the 50-year-old guy in Wells Fargo knows like any of what
No
we just
chance.
talked
No.
He has no idea what we're talking about.
Absolutely not. That's why we exist. So the easiest thing is go to our Instagram. It's literally just try Karat, TRYKARAT.
It's in the description.
And just DM us.
Okay.
Right? DM us and say you're interested. Right? You feel free.
See, and that's even better. Look at that. He's already. We hopped off a business call today. Okay, with a CEO of a company, and he said, "Okay, I'm gonna email you guys after." And I looked at him. I was like, "Listen, bro. Like after this whole talk we just had, we're on cool terms. Text us. We're not emailing. Like we're young." You know, like
DM,
we don't want to
Discord.
use email. The extent of our email use is, you know, I have a 2-factor code that needs to be used, or I have to click yes on a Google Zoom, you know, like calendar. So that in itself should show enough that you literally, you didn't say go to our fucking website and sign up or email us. You said Instagram DM us, which is what everyone wants to fucking do.
DM us
When I
on
want to work
Insta.
with a company, I DM them on Instagram, and then they say, okay, go to this email, and I'm like, all right, fuck this, I'm sending it to my agency now, like to my agents, and then they'll handle the email.
I mean, Arab, you have my personal Discord, right? Which I'm in conversations with a lot of our cardholders because that's how they want to do customer support. They want to do it through Discord. And I'm like, all right, do it. We're going to be where you're going to be. And so,
dude, that's fucking cool, dude, because a lot of the times, and I will say this, I will call them out. The worst credit card experience I've ever had in my life was with fucking Capital One. And because it was so bad, I paid off the account in full. I closed the card, and I never want to even see that name again. And it was because the customer service was fucking terrible. It was when I had, and that's another thing too, by the way. Like another reason why people, I would say a fundamental reason why people use credit cards over debit cards specifically, and why you should, is because when somebody takes your credit when you use your debit card on a sketchy gas station thing that has a card reader that somebody put over the regular card reader, and they take your shit.
I used to always feel for that after I read a thing about that. I used to feel and double check that it's.
Yeah,
they don't do it anymore
good.
though, right? It's pretty secure nowadays.
I mean, there's some old gas stations, man.
Oh,
But
on the
anyways,
old ones, for sure.
Edwin, you're talking about the chargeback protection, fraud and disputes.
Yeah. So what I was talking about is like when you have a debit card and you use your real money from your real bank account to buy gas, and it gets taken from you, and those people go into your account and clean it out, the bank will be such a pain in the ass to give you your money. They a lot of the times they'll try to not believe you. credit cards aren't that way, because the credit card money isn't your money anyways. You know what I mean? And it's a lot easier to prove fraud through a credit card than it is through a debit card. And getting your actual real liquid money back from somebody who stole it is a lot harder than getting, you know, a credit credit back.
Exactly,
you know what I mean?
Because with a credit card, you haven't actually paid it yet. The money's still in your account. So, like, and to be clear, this has happened to us, right? Creators had their cards stolen or skimmed, and people go ring up fraudulent transactions. As long as we're like, okay, cool, you didn't like go and post your numbers on Insta and like let everyone, like, we just cover it, because that's what a credit card company does, and that's an advantage. Debit card.
Yeah, because when you use your debit card and it gets skimmed, they can literally take real dollars out of the real bank. You can't do that with a credit card. If you take real money out using a credit card, so for example, Amex has this thing where if you go to an ATM and you need real money through an Amex card, they'll give you the money at a crazy interest rate until you pay it back, but they'll give you money. But it's a lot harder to get, like, and I would say sometimes you even have to call them and be like, yo, I need cash, and they'll give you cash, but it's like more of a process than just skimming a debit card, taking the real funds out, and then the person's fucked. You know what I mean?
That's exactly right.
Yeah, I had in June, I had somebody charge the fucking most exclusive suite at a hotel 3 nights in a row, $1,300 onto the credit card. And I called them. I was like, hey, this wasn't me. They know. They fucking look. And you know, in what history have I ever spent $400 suites in Maryland? You know, like, I've never even been there.
Yeah.
And they just removed it. And if I was on a debit card and that got stolen, I was fucked.
You're out of, it's really hard.
You're
It's the money from your account. It's like having a good card. It helps you so many ways as a business. But as you said, Ed, when people don't learn this stuff in school. And so what we've been trying to do is figure out how to package a better financial product in a form and product that gets creators excited enough to try and learn, right? That's why we've gone and worked with so many creators, the top names who post stories about us, because it's like evangelizing. Hey, look, this is something you should look into. And then we hope over time, we're literally as a business only going to make money if they grow and end up using other business financial products. Because that assumes a certain level of interest in financial education. Our incentives are aligned and like, wow, let's try and teach creators as much as possible about this stuff, because that's ultimately how we win as a business too.
Right. Gotcha. Now my a question I have is, you know, you guys are in the pre-launch, like, referral only situation. What would you consider, like, what size does somebody have to be considered for you guys right now, like pre-waitlist? You get what I mean?
A full-time, so we've actually already improved our underwriting and started to go to earlier stage creators. As long as you're a full-time creator who can support yourself and can actually grow faster with higher card limits, so maybe making, say, 80K plus a year, right? That's where we can probably be of service. If you're at a point where, hey, you're early on your stage, but you're making less than 80K a year, it's hard for us to really be that helpful, because we're not going to be able to give you that much more aggressive of a limit than you would just get from a normal bank, right? Yeah. But that scales up. We have creators who are making millions a year, and we're still able to give them really, really great cards. Yeah, Arab, when you talked to me at VidSummit and you're like, hey, this is who I am, this is who I use it for, this is my card, I was like, yeah, this is the right card for you. I wasn't, you know, I'm just like, cool.
Yeah, so like, I mean, he walked up to me and he was talking to everyone at the table, and I like introduced myself or something, and you know, I started talking to him because, you know, we're there to network. Everyone paid $1,000 ticket. We're all there to network with each other. And he goes, yeah, well, I use, you know, you could use this card, whatever. Most creators don't. And I like pulled out the Amex and I was like, is it better than this? And he like looked at me. He's like, that's a good card. That's a good card. Like, don't, you know, like,
for you, given what you do, this is a great card, right?
And then I was like, okay, this guy's like clearly isn't bullshitting. Like, you know, he carries himself well. Like he's, and that's when I was like, all right, come on our podcast. You know, like let's talk. And then so yeah.
Our goal is not to be the best card for everybody, right? But it's to try and be a really good option that helps you learn, and for most people, in most cases, is still gonna be really good. So, Arab, you're about to say something.
No, I was about to say, I think that's for the most part, like hoping people that listen understood a lot more about credit cards and just financially, you know, building your history, because it's not taught to you. And, you know, in this hour episode, like you learn so much, probably like things you learn over years in just this hour episode. So whether you guys made it,
dude,
is there anything else you want to say?
It took me a few years of licensing to learn what we've just talked about in this podcast, and some people will never learn it, dude. School, like college, this shit is never taught to you, and it blows my mind. Blows my mind.
Yeah, likewise, taking me years. But a lot of gratitude just to be here today with both of you.
Yeah, thank you for coming on. Guys, if you guys did enjoy this, and if you are a creator, we have a lot of creators that listen to this podcast. If you are a creator and you need higher limits to spend on your business, that is also one thing. A lot of creators don't understand the value of investing in your business. They're afraid to spend money, but you need to spend money to make more money. I mean, all the top creators do that. Mr. Beast, Eric, like all these people are reinvesting in their business. A lot of creators are just sitting on the money they're getting and like doing the same thing over and over, and it's not.
Eventually you lose your moment in the algorithm. You're less hot, and you start to spiral downwards.
Yeah,
that's really scary.
Yep. Anyways, if you are a creator and you do need higher limits, check out Karat. We got them on here not as an advertisement. Obviously, it is an advertisement for their company, but we like to build an encyclopedia of information, whether it be something that is a company or a creator, anything that has to do with the creator space. Check out Karat, DM them on Instagram. The link is in the description. Whether you guys are on Apple, Spotify, or YouTube. Thanks for making it to the end of the podcast. We'll see you guys later. Peace.